The world is changing, money is changing, technology is changing. At the forefront of this revolution are Bitcoin and Ethereum, two groundbreaking cryptocurrencies reshaping our financial landscape. Bitcoin, the pioneer, emerged as digital gold, a decentralized store of value challenging traditional currencies. Ethereum, the innovator, took blockchain technology a step further, creating a platform for decentralized applications, smart contracts, and a new era of digital ownership. These cryptocurrencies have captured the imagination of millions. They represent a shift in power, a move away from centralized control towards a more democratic and transparent financial system. But with their rising popularity comes the question, what are the key differences between Bitcoin and Ethereum, and which one is right for you? Bitcoin, often called digital gold, was created in 2009 by the pseudonymous Satoshi Nakamoto. Its primary purpose is to serve as a decentralized, secure and transparent form of money. Imagine a currency not controlled by any government or financial institution. That is Bitcoin's promise. Bitcoin operates on a decentralized ledger called a blockchain, a public record of all transactions verified by a network of computers. This decentralized nature makes Bitcoin resistant to censorship and manipulation. It has a limited supply of 21 million coins, ensuring scarcity and potentially hedging against inflation, much like gold. Ethereum, launched in 2015 by Vitalik Buterin, expands beyond Bitcoin's scope. It's not just a currency, it's a programmable blockchain platform. Imagine a global computer that allows for the creation of decentralized applications, or dApps, and smart contracts. That's Ethereum's vision. Smart contracts are self-executing agreements written in code, eliminating the need for intermediaries and ensuring trustless transactions. This opens up a world of possibilities, from decentralized finance, or DeFi, to supply chain management, gaming and digital art through non-fungible tokens, or NFTs. Both Bitcoin and Ethereum rely on blockchain technology, but their implementations differ. Bitcoin's blockchain is primarily focused on processing and securing transactions. It's like a digital ledger recording every Bitcoin movement. Ethereum's blockchain is more versatile. It's designed to execute complex code that underpins dApps and smart contracts. This requires a more robust architecture and different programming languages. Ethereum uses Solidity, while Bitcoin uses a scripting language tailored for financial transactions. Consensus mechanisms, proof of work versus proof of stake. To maintain their blockchain's security and integrity, Bitcoin and Ethereum employ different consensus mechanisms. Bitcoin uses proof of work, a system where miners solve complex mathematical problems to add new blocks to the blockchain. This requires significant computational power and energy. Ethereum, on the other hand, has transitioned to proof of stake. In this system, validators stake their ether to participate in block validation. This process is significantly more energy efficient than proof of work and is considered more environmentally friendly. Market sentiment, bulls, bears, and the future. Both Bitcoin and Ethereum have experienced significant price volatility since their inception. Bitcoin, being the first cryptocurrency, holds the largest market capitalization and is often seen as a store of value, similar to gold. Ethereum, with its vast potential in decentralized applications and smart contracts, is perceived as a higher growth but also higher risk investment. Market sentiment for both cryptocurrencies is influenced by various factors, including regulatory developments, technological advancements, and overall market trends. Energy consumption, a growing concern. Bitcoin's proof-of-work consensus mechanism has been criticized for its energy consumption. The mining process requires substantial electricity, raising concerns about its environmental impact. Ethereum's transition to proof of stake has significantly addressed this issue. By moving away from energy-intensive mining, Ethereum has reduced its carbon footprint, making it a more sustainable option for environmentally conscious investors. Community and development, the driving force. Both Bitcoin and Ethereum boast vibrant and active communities. Bitcoin's community is known for its strong ideological beliefs in decentralization and its resistance to changes in the core protocol. Ethereum's community is more focused on innovation and the development of new applications on its platform. This open-source approach has led to a flourishing ecosystem of decentralized applications and smart contracts, constantly pushing the boundaries of blockchain technology. The verdict: choosing your champion. So, which one is right for you, Bitcoin or Ethereum? The answer depends on your investment goals and risk tolerance. Bitcoin, with its limited supply and established position as digital gold, offers a potentially safer, albeit potentially less rewarding investment. Ethereum, with its vast potential in decentralized applications, smart contracts and NFTs, presents a higher risk, higher reward opportunity. Ultimately, the best choice depends on your individual circumstances and understanding of the ever-evolving world of cryptocurrencies.